All right, the Indian IPO market is absolutely buzzing right now, and we've got another big one hitting the street. But hold on, this isn't some fresh-faced tech startup. We're talking about KSH International, a real industrial heavyweight that's been in the game for decades. They're finally going public, which brings us to the million-dollar question. Is this an opportunity you should jump on? Well, let's dive in and find out.
So here's our game plan. We're going to break this whole thing down into 5 parts. First, we'll see who's coming to the market. Then we'll peek under the hood at what KSH actually does. After that, it's all about the numbers. Then we'll play devil's advocate and look at the risks. And finally, the big verdict. Let's get to it.
Okay, first things first. Let's just set the scene here. Who exactly is KSH International, and why are they making their public debut right now?
Yeah, you can forget about the flashy app of the week. KSH has been a manufacturing powerhouse since way back in 1981. They make these things called magnet winding wires. Now, that might not sound super exciting, but just think of these wires as the essential veins inside literally any electric motor or transformer. I mean, without them, our entire modern world would just grind to a halt.
So, what are these veins really for, and who's buying them? This is where the KSH story starts to get really compelling. Let's take a look inside.
Wow, okay, this slide pretty much says it all, doesn't it? These guys aren't just playing the game, they are a dominant force, the 3rd largest manufacturer in all of India, and get this, the #1 largest exporter. That is a massive statement about their quality and their global competitiveness. And their products are basically the unsung heroes inside, well, everything. We're talking about the huge transformers that keep our lights on, the renewable energy systems we're all counting on, the motors inside the electric vehicles that are taking over the roads, even our trains. KSH components are in there, quietly making it all work.
All right, let's get to the part I know you've been waiting for. It's time to crunch the numbers. What's the price tag on this IPO? How big is the deal? And most importantly, how have they been doing financially? Here are the vitals. Mark your calendars. The IPO is open from December 16th to the 18th. The price band is set between 365 and 384 rupees a share. For a retail investor, your minimum ticket in is just under 15,000 rupees for a lot of 39 shares. And the whole shebang, it's a sizable 710 crore issue.
And this chart explains why they're going public right now. The growth is just explosive. Yeah, total income is climbing nicely, but look at the real story here, the profit after tax. It absolutely skyrocketed by 82% in the last fiscal year alone. Now that is the kind of serious momentum that gets investors paying attention.
So you might be asking, where's all this fresh cash going? Well, they're being incredibly smart and disciplined here. A whopping 53.8%, more than half, is going directly to paying down their debt. That's a huge move to strengthen their balance sheet and set up a rock-solid foundation for future growth.
But look, it can't all be sunshine and hockey stick growth charts, right? A smart investor never gets swept away by the good news. You have to look at both sides of the coin. So let's dig into the potential risks here.
And here it is, the classic investment tug-of-war. On one side, you've got some incredible strengths, a market leader, amazing financial growth, and a solid customer list. Plus, it's a tough business to get into. But on the other side, there are definitely some red flags to consider. That debt level's a bit high, they rely a lot on their top customers, and of course, they're exposed to the volatile price of raw materials like copper.
And let's put a hard number on that debt we just talked about, 1.17. That's their debt-to-equity ratio. Now, that's a bit higher than some of its competitors, and honestly, it explains exactly why they're using over half the IPO money to tackle it head-on. They know it's a concern, and they're being proactive.
Okay, we've seen the business, we've gone through the numbers, and we've weighed the risks. It's time to bring it all home. What's the final verdict? What are the experts saying? And what's the buzz on the street?
So, what's the word from the pros? Well, it's interesting. The community's pretty split. You're not seeing a universal go-for-it call. You've got firms like Angel One giving it a subscribe for the long term, but then others like SBI Securities are more on the fence with a neutral, kind of saying, let's wait and see. This quote right here from Swastika InvestMart really just hits the nail on the head. It perfectly sums up the general feeling. The story here is about fundamental, long-term growth. This is a stock for the patient investor, not for someone trying to make a quick buck on listing day.
Now, speaking of those listing day gains, there's a little something we can look at to gauge the immediate hype. It's an unofficial indicator called the gray market premium, or GMP. Basically, it's the buzz on the street, what people are willing to pay for the shares before they even list.
So what is the GMP for KSH International? Are you ready for this? 0. A big flat 0. This tells us that the unofficial market thinks the IPO is priced, well, fairly. There isn't much room for a big pop on day one, which lines up perfectly with what the brokers are saying.
So that really leaves us with the big question, doesn't it? On one hand, you have a market-leading company with fantastic, proven growth. But on the other, it's been priced to reflect that growth, and the short-term excitement is, well, pretty quiet. So you have to ask yourself, is KSH a long-term engine you want powering your portfolio, or is it a risk you'd rather avoid for now? That's the decision you get to make.